I'm Sash Kasher with the Emerging Markets Institute, and this is the Frontier Minute, a quick look at the biggest developments across emerging markets this week. Brazil's Banco do Brasil launched cross-border PIX payments in Argentina on March 6th. The state-run lender introduced a feature that lets Brazilians pay for purchases in Argentina using the PIX instant payment system. Developed with the Banco Patagonia, the service works for any PIX user and lets shoppers scan a QR code. The Brazilian customer is debited in reais, while Argentine merchants are paid in pesos. Executives said the system strengthens Banco do Brasil's international operations and mimics a growing trend of heavy investments in fintech within emerging markets. Moving on, Uganda's central bank has started a domestic gold buying program on March 2nd. The Bank of Uganda announced it will buy at least 100 kilos of gold between March and June of this year in order to boost its revenues and shield the economy from market volatility. Officials said that they are finalizing contracts with refineries to ensure purity. The program follows Uganda's booming gold exports, which reached $5.8 billion last year, up 76% from 2024, and the country's first large-scale gold mine that can produce about 1.2 tons of refined gold a year. In the Middle East, big tech has doubled down on AI investment, despite regional conflict. Reuters reported that the U.S.-Israeli war against Iran has created uncertainty in the region. However, multinational companies continue pouring in more and more capital. Oracle will invest $1.5 billion to expand cloud infrastructure in Riyadh and Jeddah. Amazon Web Services will spend more than $5.3 billion on a new data center region in Saudi Arabia by 2026. Google Cloud, with Saudi Arabia's public investment fund, have pledged $10 billion to build a global AI hub. Microsoft plans to invest $15.2 billion in the UAE through 2029 through an AI partnership with G24. The leading Abu Dhabi-based AI technology holding company. We can expect that these states to aim to diversify their oil-dependent economies and focus on becoming global AI hubs. China is also shifting from labor-intensive growth to AI-driven productivity. Guangdong has vowed to embed AI across its $2 trillion economy. Officials in China's largest provincial economy said that they will expand AI applications and accelerate the AI Plus strategy rolled out by Beijing, which involved a plan for 70% usage rate of AI agents by 2027 and a 90% penetration rate by 2030. Guangdong, with a GDP of roughly 14.6 trillion yuan, which is about $2.1 trillion, plays a critical role in global supply chains. Shenzhen's mayor noticed that the strategic emerging industries like AI, robotics, or semiconductors now account for 43% of the city's GDP and called for more support to build a self-sufficient AI hardware and software ecosystem. On a macro scale, it is seen that emerging market equity funds have sunk as the Iran conflict sparks global risk-off. Data from the London Stock Exchange Group showed emerging market equity funds plunged more than 6% for the week, with funds focused on Pakistan, Chile, Greece, Colombia, Argentina, and the UAE and Saudi Arabia suffering the steepest declines. Inflows in these funds have slowed to $5.8 billion, the lowest in 7 weeks. Analysts have noticed that while earning prospects remain solid, with high starting valuations, which means markets were already priced optimistically, leave EM equity markets vulnerable to near-term corrections, or more simply put, a short-term drop in prices. The drop-off in inflows shows investors cutting exposure to riskier assets amid the escalating Iran conflict. The biggest takeaway this week is that although many EMs promise growth through fintech startups or AI investment, market volatility remains high within the supply chain disruptions caused by the Iranian conflict. For more analysis on emerging markets, follow the Emerging Markets Institute at Cornell. I'm Sash Kasher, and this has been the Frontier Minute.